The KRE Regional Bank ETF still negative on the week, but your next guest says the concerns surrounding NYCB are more about the bank itself and less about regional banks or commercial real estate in general. Joining us now is Ron Kamdem. He is the Morgan Stanley head of U.S. REITs and commercial real estate research. Ron, you make a great point looking at some of your notes, which is that, and this is a little bit wonky, but it's important. Once New York Community Bank Corp bought some of Signature Bank's assets, it catapulted them over $100 billion in assets, which changed the way they are scrutinized by regulators. How big of a deal is that part of the story?
Yeah, thanks for having me on. And I was just catching up with our mid-cap banks analysts, and I think you're spot on that the event that happened in NYCB is idiosyncratic because it's very unique for that bank to move from a different regulatory bucket into a higher category 4 bucket where there's more sort of provisioning and regulation involved. So we think that's actually what catalyzed the provision surprises that you saw. And we do not expect that to translate into some of the other sort of regional banks in the sector.
Yeah, so I guess I'll flip it and I'll ask you to speculate, Ron. You can dodge if you'd like, but if NYCB had not bought those assets, if they were still below a $100 billion in assets and scrutinized and sort of examined and regulated as that classification, not class 4, do you think we would have seen the magnitude of the decline in the stock?
Yeah, it's a really good question. So when you think about commercial real estate, usually these loss realizations happen over time, right? Over a 2 or 3 or 4 year period. And the two things that we have to remember this cycle is that, number one, commercial real estate is a 13 trillion asset class, but only about a quarter of it is office, right? And number two, most of the biggest lending that happens on commercial real estate does happen in the smallest banks in the US. They do about 27% of the lending. So to answer your question directly, I think that provision process could have taken a longer period to play out. But make no mistake, we do sort of still expect commercial real estate values and office specifically to continue to decline this cycle. So we would fully expect the banks to continue increasing those reserves and increasing those provisions over time.
Is NYCB, with the massive sell-off, a good deal? Is it a buy here?
Yeah, it's a good question. I don't cover it personally, so I can't comment on it. What I will say is that these commercial real estate issues is not something that's going away overnight. The price discovery process does take 12, 24 months to play out. So I wouldn't be rushing into anything whenever I'm dealing with commercial real estate.
So you think there still may be time in the sector, because you're the REIT guy, that in the sector may still have some cleansing? Because, Ron, when I look at the numbers, and I know a lot of people predicted commercial real estate doom last year. It did not happen. Some good properties are able to get refinanced. They can just keep pushing. At some point that comes to a head, and there's big numbers coming up through 2025. Do we see another leg down overall?
Yeah. So you make a really good point, Brian, because when you think about what's the catalyst to drive a lot of these commercial real estate market, you have to think about commercial real estate maturities. So there's about $660 billion worth of debt coming due in 2024. 20% of that is office, and 40% of that is multifamily. So when we're investing in the commercial real estate market, we've told investors the office sector is where you have the most secular headwinds, and that's where you're likely to see the biggest downside surprise. So that's a sector you want to sort of avoid. But there's other aspects of the commercial real estate market, being industrial, being retail, being senior housing, where there's still sort of opportunities for investors to buy really good quality companies with good sort of earnings growth. So it's important to just remember that there's a diversification to the commercial real estate market. And this cycle, the risk is acute to one sector.